I don't really. I mean, they're part of the group within OPEC that has been pressing really since the end of the year, and even during the OPEC meeting that Jackie just referenced, for some kind of production response to the lower prices. So this is going to fall on deaf ears in the Kingdom of Saudi Arabia and in Kuwait. And as you mentioned, they continue to increase production, and as does Iraq, for that matter, and even non-OPEC Oman is gearing up to put more oil on the market. So this dynamic hasn't changed, and I think the Saudis is, again, as Jackie rightly referenced, are waiting this out for a longer-term play to squeeze out the U.S. shale producers. And as those rig counts continue to come down, I think that they are counting their days to when the price can rebound on that basis, and not from them cutting.
So I think the Fed will move very slowly towards this. Right now, the Fed talking about raising rates at a time when many other central banks are cutting rates is somewhat incongruous. And I think it will take them that long to finally get around and pull the trigger. They've been telling us for a while now that they could start raising rates in the middle of the year or later. And I think they'll stick to that mantra. I think that's what Yellen will tell us again tomorrow.
The economy is going not so rear view mirror. But certainly the Fed has moved slowly. If they don't go in June or September, they're not going in December. I can't imagine they would wait all year, go in a month around the holidays when markets are illiquid. So they haven't gone by mid-year. They're not going. If the Fed waits until they actually get signs of the wage and price pressure, I just don't see at that point how they could control the market. The thing is, it's hard for me to believe that the strongest job market in 17 years is going to be hurt by one rate hike or two rate hikes or three rate hikes. That, to me, is absurd.
Even if it's for the right reasons, the market needs to digest that Fed change and that change in policy. And we're seeing that since the beginning of the year. We're seeing a shift in leadership, a rotation in the market. Look, last year was all about equity income. It was about REITs outperforming. It was about utilities outperforming, the S&P itself. This year's a very different animal. We're seeing a shift to the overseas market. You can get a lot more yield and a better valuation, low price to book, low price to cash flow, lower price earnings overseas than you can get over here.